Hi, I'm Jim Jubak. If you like this video, please like it. Subscribe to my YouTube channel. You can get more of me on my print site on jubakpicks.com. It's free. There are 3 portfolios, including a couple that contain Amazon and stocks of that same ilk that we're going to talk about today. Or you can subscribe to my jubakam.com site, which has 6 portfolios, including some options and ETFs. And you can find links to all that stuff down below. I went to a ball game yesterday, my first of the season. I went to see the Yankees play the Orioles. What I was thinking about was the way baseball imitates the stock market. You could, on this day, hit a home run to left field. Not impossible. The wind was blowing in, so it would make it harder. If you hit a ball to right field, there was a good chance that what could have been on another day a lazy fly ball will turn into a home run. The stock market works the same way. You can have stocks which perform despite the trend in the market, like hitting a home run to left, and you have stocks that have an easier job because they're going with the market. That all said, let's talk about Amazon's earnings. Amazon on the 28th, after hours, reported its first quarterly loss in more than 7 years. Amazon is down about 14.6% on the day. You can see it there. But you also notice that Amazon has not exactly been tearing up the track to the upside. It's been pretty much a downtrend for all of April. So it's not surprising the stock would sell off. The lessons in Amazon for the rest of the market is because of what Amazon did. Amazon basically looked at trends for sales in the pandemic and said, hey, we think that we're going to keep a lot of this business, or in fact, it's just trends are going to keep on going after the pandemic is over, and we're going to build out the warehouses, not just for pandemic volumes, but for post-pandemic good times, and we're going to hire people. What basically they did is they spent too much money in the quarter on warehouses and workers. The total operating expense rose to $113 billion. Of that, 20-some billion went to fulfillment. This took a huge bite out of Amazon's revenue numbers. And you combine that with the fact that sales sort of slumped. Overall, the revenue figure was up about 7.3%. But if you look at another Amazon measurement called unit sales, which really looks at, it doesn't throw in the stuff from Amazon Cloud. It basically just looks at the core business. Sales were flat year to year. So basically, here's a situation confronting Amazon. If you looked at where you were at the end of 2021, you got to say, okay, do we spend the money to build out for those volumes that we have now that we think we might keep a good amount of, or do we basically see our fulfillment times expand and people get unhappy with us? And they decided, and I think this is a reasonable thing, they decided that they would build out the warehouses, they would hire more workers, and they would hope that they would gain market share during that time, and that would continue after the pandemic. So far, it looks like that's not going to turn out to be true. But it really sort of encapsulates a problem that all businesses face as we move, at least for the moment, from the pandemic to the post-pandemic. Basically, the issue is, do you build out for the volumes you had at the end of 2021, or do you sort of starve your customers from service in order to make sure that you don't overspend? I think this is a problem that confronts companies ranging from Uber and DoorDash to Starbucks, certainly to Netflix, Peloton, but it's across the economy. And if you look at the GDP numbers for the first quarter, which came out on the 28th, and they showed a 1.4% decline if you annualize the rate from the quarter, a lot of that came from companies deciding that, hey, they had built up enough inventory at the end of 2021 because they were worried about the supply chain, and they stopped buying inventory in the first quarter of 2022. That came out of GDP growth, probably going to bounce back, but nonetheless, this is a big problem confronting companies, and it's a big problem confronting investors, because it's like, well, what is really the growth path for this company? What's revenue growth going to look like as we go from pandemic to post-pandemic and then maybe back to pandemic. Who knows what's going to happen in the winter? And so it makes things very, very hard to figure out. It makes stocks very, very vulnerable to anything that looks like a surprise on the downside. And that's why you got a 14% drop in Amazon on the day after their earnings. Thanks for watching. If you like this video, please give us a thumbs up, like it. Subscribe to my YouTube channel. If you want more of my stuff, you can go to my free site, jubakpicks.com. 3 portfolios there. And if you want 6 portfolios and even more of my posts every day, jubakam.com. That's my subscription site. And there are links to all that stuff down below. Thanks very much for watching.